Hey everybody, Greg Crawford here with the Vintage Dad Life. In this video, I want to talk about something that's very important. If you have a family, if you're married, if you have kids, um, and it's something that people don't like to talk about. They don't like to plan for their own demise. And what I'm talking about is life insurance. So if you have a family and you don't have life insurance, you are you are really gambling because you have to think about if you walked out of your house today and got into a bad car accident or just had a massive heart attack, whatever it was, and you're gone tomorrow, what does it look like for your family? Obviously, they're going to be grieving. Um, they're going to, their life is going to be turned upside down. So, do you want to make it even harder for them financially on top of the emotional things that they're going to have to deal with you gone? So, you really need to start thinking about life insurance. And the other thing, what I'm going to cover in this video, is how much life insurance should you actually have? And I speak with a lot of people, a lot of husbands, a lot of wives, and they are severely underinsured. It doesn't cost a lot of money to get yourself a good amount of life insurance because you have to think about all of the income that's going to have to be replaced. So, what I'm going to do now is break down a good kind of formula on how to come up with the right amount of life insurance so that you can make sure that you do have close to that amount. A lot of times, with a job, you might get some life insurance, some group life insurance. Most likely, your group life insurance is not going to be enough to support your family when you're gone. Also, if you leave the job, that probably goes away as well. So you definitely have to buffer that with your own policy. So let me go ahead and share my screen and I'll show you how I come up with the right amount of life insurance with my clients specifically. Okay. So I got this from a colleague of mine. It's called the DIME. So the acronyms is DIME. So the first letter D stands for all of your debts. So what you want to do is come up with a number of how much debt are you carrying right now? Let's say it's $20,000 in debt right now you're carrying. Okay. The next acronym is I. That stands for income. Okay. And what you want to do is come up with what do you make per year? Okay. So let's say you make 100,000 per year. Okay. We like to cover for at least 5 years of your income. Not if you're gone tomorrow, we want to cover your income for at least the next 5 years for your family. So if you're making 100,000, that's 500,000 right there. Okay. All right. So next with the M, we have mortgage. If you have a mortgage, if you have a home, you own your home, how much do you have left on the mortgage? It would be really great if tomorrow something happened to you, your family can at least pay off the house. So let's say you're holding on to 300,000 mortgage still. Obviously if you're younger, you're in, like 40, you're going to have a higher mortgage still that's owed. And then the last acronym E stands for expenses like specifically education. Okay. So if you have younger kids and you want them to be able to go to college and do all those things, what does that look like? So let's say it's an extra 50,000. So at least your kids could get an education if you're gone, and you know your spouse isn't left with the bill. Okay, so if we add that up, we have 20,000. I'm going to pull out my calculator. Hold on. Plus 500,000 plus 300,000 plus 50,000 equals 870,000. Okay, so you should have a minimum, if this was your scenario, a minimum of 870,000 in death benefit. Now, what happens is if you're younger and you want to just protect your income, protect your family, you could use what's called a term life insurance. There's term life insurance and permanent. I'm not going to get into the nitty gritty of the differences, but let's say it's a term policy. It can be a term of 15 years, 20 years, 30 years. But most people on average choose a 20-year term. And this is going to get you at least later in life, where you guys might have some money saved up, retirement and so forth. Okay. A 20-year term policy for someone who's fairly healthy, let's say 40 years old, is going to be under $100 a month. Okay. Way under $100 a month. I myself have over $1 million in term. I got it in my early 40s and I'm still paying less than $100 a month. So it's really inexpensive to protect your family. So I have no idea why everyone is not doing this. Okay. So that's how you pretty much determine how much life insurance you need. So if you do get some life insurance from your job, let's say 100,000, 200,000, just subtract the difference of what you really need and go out there and get some more. If you have any questions, if you need some help, obviously I'm a life insurance broker, so I, can kind of shop it around for you and help you with that. Go ahead and leave me a comment or shoot me a message, and I'd be happy to work with you. All right. Hope that helps, and I'll see you in another video. Take care.